So right now you're losing money and you don't even know it. Not because you're spending too much, not because the market is down. It's because your money is moving way too slowly. See, most people are on a wealth journey completely blindfolded. They're guessing, they're trying different things, looking for something to build wealth faster. There is no map. And so there is no sense of how fast or slow your money is actually moving. And today I'm going to remove that blindfold. I'm going to show you a force that the wealthy understand and almost nobody else talks about. And in fact, for the few people that do talk about it, they're not sharing with you the whole story, the best information about this. And it's called velocity of money. And it's incredible. And once you understand it, you'll never look at your money the same way again. So let's go ahead and talk about this hidden force that controls financial speed. Again, before we dive into this idea of velocity of money, I want to share something that we all grew up with. Let's start with that. So we all grew up with the game of Monopoly. And so what happens when you pass go? Obviously, we all know you collect $200. Now let's take this a step further. I want you to imagine that every time you pass go, we all know you collect $200. However, what if the amount increased every single turn? So every time you pass go, it increases a little bit. It's 200, 210, 220, 230, 400. It keeps growing over time. And what if you could move faster around the board, right? What if you can get there faster? So instead of rolling, 20 times, you get there in 3 or 4 rolls, right? And what if you were playing multiple boards at the same exact time? So every time you pass go, you're collecting from every one of the boards. And again, each one of them is growing. It's $200 plus every single time. That is velocity of money. And so this is what we're talking about, folks. Now let's take this a step further so we can understand the power of this. So in here on the screen, you'll see we have these 2 bottled water. One is $5 and one is $1.50. And the one on the left costs $4 and you get to sell it for $5. And so your profit per bottle is $1. The one on the right costs you $1.40 and you would sell it for $1.50. So your profit is 10 cents per bottle. Okay. Now, obviously, looking at this, you can see the one on the left is more profitable. But let's look at how many people buy this. So 100 people buy this every month. So you are selling 1,200 bottles per year, and therefore your profit per year is $1,200. Now, the one on the right, you're selling 1,000 bottles per week, which is 52,000 bottles per year. And therefore your profit is $5,200 per year. You can see it's significantly more than the one on the left. So the one on the left is high profit, low turnover strategy. On the one on the right is high turnover, low profit strategy. This is one of the important things about velocity of money. See, the one on the left is when you buy something and you just wait for it to sell or to go up in value and you hope it sells, right? The one on the right, you have more visibility and more control about it selling, and that's what we call a micro gain. Remember that term, micro gain. So in the one on the right, you are doing a high turnover and you're creating a lot more profit. So what is velocity of money? Velocity of money is nothing more than how fast your money goes out, makes money, and comes back to do it again. And the more cycles, the more wealth with the same exact capital, just like the bottled water there. So this is what velocity of money is. It's the idea of going out, making money, and coming back as fast as possible. You're not having to wait for years and years. So here is what most people think. Most people think, okay, so I'm gonna take this $100,000 and I'm gonna invest it. I'm gonna wait for 5 years, and I'm gonna get one return after 5 years. So it's one cycle, one chance. However, what a lot of people talk about with velocity of money is this idea of what's called the fast version. This is velocity of money in their eyes. You take the $100,000, you generate cash flow, and the cash flow is redeployed or reinvested, and therefore you start seeing compounding. So this is partially correct. However, this is way, way, way too slow, and this is what the majority of the people talk about when they talk about velocity of money. What we're going to do here, we're going to elevate it so you can see the power, the different levels of velocity of money, and which one you should be really thinking about, and also how do you go about doing this, okay? So this is what everyone thinks about on the right. We're going to go much faster than that because, as you're going to find out, this is extremely inefficient. Inflation is actually also moving with you and racing you, and therefore you have to be moving even faster. So with that, why does actually speed matter so much? Well, time compounds with or against you. So think about that for a second. Whether we like it or not, time is working against us because of inflation. And so the key is we want that to work actually for us, not against us. And for most investors, it's working against them. The other reason is because inflation is racing your money every single day. So a lot of people show you this chart of velocity of money and the compounding, but what they don't show you is also inflation is compounding. What does that mean? That means by the time you get to the end of the chart, everything has increased in price and you can't afford to buy much more than where you were today. So this is why people need to understand that you are in a race, whether we like it or not, with inflation. And typically inflation will always win because we are not maximizing our money efficiently, our investments, which we'll talk about here in a second. The other reason is because slow systems delay freedom by decades. And so how can we move faster and save on decades of waiting? We're going to show you how. And finally, faster cycles means faster wealth growth. And as you'll find out, more controlled growth as well. So with that, you can see here why this is so important. Whether we like it or not, we are in a race against time. So you don't win by earning more. And this is something that a lot of investors out there and a lot of people think, I'm just going to earn more. But time is working against you. You win by moving money faster. What does that mean? That means we want to make the money work harder for us than we are for it. Okay. And so let's talk about now the 4 levels to the speed of money. This is the velocity of money we're talking about, and we want to really take it to the next level because the faster the money moves, the faster we build wealth. So let's start with level 1. Level 1 is what we call manual velocity. Manual velocity is when you work hard, you earn money, you invest it, and every now and then you go in there and you reinvest some of the money, right? The reinvestment is very inconsistent or delayed. And so it is all waiting for you for the manual work to actually reinvest it. So no system here forcing the loop. There's nothing automated, and speed is slow and irregular. So I would say quite a few people are in this boat here. So let's talk about level 2. Level 2 is where we take level 1 and we actually automate it. And this is compound velocity. This is where money is automatically reinvested. So you set it to automatically reinvest. Now, the problem here is that you are reinvesting cash flow. You can see here it says cash flow is systematically reinvested. And this is what most people talk about is this level 2. The loop is closed, compounding is happening, and speed is consistent but still limited because now you are still in a race with inflation. Here's the challenge, folks. This is very relatively slow because of inflation. And so the question is, how do we go faster? So I want you to remember that the words cash flow is being reinvested. Now in level 3, we're going to take it a step further. This is called leveraged velocity. This is where things get really interesting. This is where time compression begins. This is where you start going much faster and you're getting to your goals much faster. You're borrowing against your assets. What does that mean? I invest a certain amount of money, for example. Instead of just reinvesting the cash flow, what I'm doing, I'm borrowing against it immediately. And I'm reinvesting that as well. So now we have 2 parts. We have the reinvesting the cash flow, and we're reinvesting the amount I borrowed against it immediately and start reinvesting that. This way now, you're increasing the frequency of investment and you're redeploying everything immediately, and everything is as automated as possible. Money is no longer waiting, and now speed is moving much faster. This is where very few investors ever do this, and it is incredible. However, there's much faster, and that's what we're going to talk about today is level 4. This is called engineered velocity, and this is where things take off like crazy. At this level, you're no longer investing, you're operating a capital engine. I want you to imagine you're controlling an engine that is going so fast and you're out there just controlling it, right? And it might take maybe an hour or so per month just getting it moving so fast. This is where very, very, very few people ever get to this point. This is where we're talking about sequence. So in the previous example, we talked about cash flow being reinvested and borrowing against it immediately. But here's a problem. If you invest in the wrong sequence of strategies, that might slow you down. So, for example, let's just say you're moving money and you invest in real estate early on in the wrong time. So, when you look at two different assets and you fund them in the wrong order, that can slow you down significantly. So, the sequence of strategies is critical. And this is what I'm talking about here. Sequence of strategy is optimized so that the previous strategy is creating synergy with the next strategy. And this is where things go crazy, powerful. Spread management. You remember when I talked about micro gain? So what we're doing here is we're making sure that every sequence we're looking. There's a spread management. You're making actually money off every turn, and this is what I call the micro gain. You want to make sure every turn is actually profiting you, because most people are turning money, but it's actually not necessarily profitable. This is where you're being very deliberate. Continuous capital cycle, just like we talked about before. So here is you've built a system and you're measuring everything. Again, this is where technology is helping you. You're measuring everything and you're optimizing everything along the way so that the money starts moving so much faster than you can ever save yourself and having to invest. Now this is doing the heavy lifting for you, and that is investing itself. And so it becomes a self rotating engine that is generating not just more capital, but more assets, right? And so money is designed, controlled, and engineered at this point. And it is phenomenal, phenomenal, phenomenal. This is where very, very, very few people ever play or get to. Now, why am I telling you this? Because most people out there that talk about velocity of money, they're talking about level 1 or level 2. Level 3 is very few people ever do this. This here, level 4, is taking it to the next level. This is about truly engineering velocity so much faster and measurable that you can see the speed of it. You can see your wealth growing much faster. Level 4 unlocks something that you might have heard us talk about in the past, is hyper compounding. Hyper compounding is that bending the line that goes like this. And so money doesn't just compound in this case, it is accelerating with a huge force. And this is what I'm talking about when I talked about earlier. What you want to do is you don't want to just do velocity of money. You want to be very deliberate in making it move so much faster with the right sequence and optimizing everything along the way. Now that sounds complicated, but guess what? A lot of people are doing this in our community because they know what to measure. They know what to look for. So this is what separates level 4 players from everyone else. So what our members are doing, again, a lot of people have heard about our members doing really, really well, is exactly this. They use what we call the capital amplifier. The capital amplifier is engineered to be a level 4 velocity of money, and what we call a capital factory sometimes, or asset factory. This is a system built to operate at level 4 and unlocking hyper compounding. It's phenomenal. So here's what most people don't realize. Most people think this is way too advanced. This is only for the very rich. That is not true. It turns out most people have the capital. They just don't have the system to do this. And here's what's the best part. What if all of this could be done with a few clicks every single month? A lot of our members are doing this no more than an hour per month, managing the machine. Now, they obviously have to have time to learn about the machine and build it, but just managing the machine, the capital amplifier, is about an hour per month. Think about that for a second. So level 4 isn't really for everyone. It's for those who decide, I want to elevate my game, I want to put the effort, and I want to really take the time to learn to manage this thing, again, once a month, to make sure it is optimized. So the question is, are you going to be one of them? So in conclusion, here's what I want to say. Velocity of money is incredible. That's why a lot of the top experts, for example, Robert Kiyosaki in his book, Rich Dad Poor Dad, talks about velocity of money. A lot of people talk about velocity of money. You have to start codifying it and really increasing your level from level 1 to level 4. So start by reinvesting. Again, cash flow, that's the slow way, but you have to start somewhere. So level 2 is you start putting it on autopilot. And then level 3, you start borrowing against the investment and reinvesting that. And level 4 is where you take things to a whole new level. So now that you know what most people will never understand, which is that wealth isn't built by earning more money. It's built by moving money faster, smarter, and with intention. So if that shifted something for you today, do me a favor and hit subscribe. Every week I break down the financial strategies of the very wealthy without the jargon and without the noise, just the frameworks that actually move the needle. And if you know someone who's working hard right now that you can think of, but feels like they're not getting ahead fast enough, share this video with them. This might be exactly what they need to hear right now. I'm George Antone. I'll see you in the next video.